Hello, everybody. Welcome to Intermediate Accounting 17th edition of Video Solution Walkthrough, Kiso, Weinget, and Warfield. This is exercise 2315. Authors of this great textbook are Don Kiso, Joey Weinget, and Terry Warfield. The question used in the presentation is copyright 2019 by John Wiley and Sons, Wiley. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. So let's get to it. Okay, before we say thank you, Wiley, we need to go through and do the question. So right over here, pay the ghost, do the question, always fun. So when I get a statement of cash flow question, this is the way I like to do it. And this is what I've always gone through and how I've shown my students how to do it. The first thing I like to do is I like to create a skeleton. Right? Not a skeleton key, which was a kind of okay film with Kate Hudson. But what we're really going to be doing here is we're going to be looking at a Lee Company statement of cash flows for the year ended 12/31/20. And the way I want to do this is I want to start over here, my cash flows from operating activities. And this will be net cash blank operating activities. I'm going to have cash flows from investing activities. Net cash blank investing activities. Cash flows from financing activities. Net cash blank financing activities. My total change in cash, my beginning cash balance, and then my ending cash balance. Uh-oh, we're not cheating, we're not chegging. I just forgot to basically get rid of this. Okay, so my total change in cash for this particular question was over here. My total change in cash is 7,000. My beginning cash balance was 8,000 and my ending cash balance was right over here was 15,000. Okay. All right. And then over here, I would also want to have something down here for non-cash transactions. And we'll go from there. Okay. So for this particular question, right? And this is what's kind of, so again, when we're doing on a statement of cash flows, it went from 8 to 15. We are pretty much always going to be given the answer. So that total change in cash was $7 grand. How did that change come about? That's really what we're trying to go through and figure out with this particular problem. We want to basically go through and figure this out. The other thing we're also going to go through and do is we're going to go ahead and make or basically create T accounts for all of our balance sheet accounts. So let's go ahead and do that as well. We're going to have over here current assets. I'm going to have long-term debt investments. I'm going to have plant assets. I'm going to have accumulated depreciation. I'm going to have current liabilities. I'm going to have bonds payable. I'm going to have common stock. I'm going to have retained earnings. Next thing I'm going to go through and do, my current assets had an opening balance of 60,000, ending balance of 85,000. My long-term debt investments had a beginning debit balance of 53,000 and an ending balance of 10,000. My plant assets had a beginning balance of 215,000, ending balance of 335,000. My accumulated depreciation, which is a contra asset account, had an opening balance of 40,000 and an ending balance of 20,000. My current liabilities had an opening balance of 22,000, ending balance of 40,000. My bonds payable had an opening balance of 0 and an ending balance of 75,000. My common stock had an opening balance of 254, ending balance of 254. My retained earnings had an opening balance of 20 and an ending balance of 56. Now, before we kind of go any further, though, I do want to point out a few things. The reason when we're going through and dealing with T accounts is that when we're dealing with T accounts, it's really, why do I do it this way? Is because when you do cash flows, you're going to find that by going through and using this methodology, it's going to be a lot of an easier way to do it. And if you're ever on an interview where you're someplace you don't know how to record something, just remember the little song like AELOE. This is assets equals liabilities plus owner's equity. ER, emergency room, or expenses and revenues, debits and credits. I record expenses with debits, revenues with credits. Assets typically have debit balances. They're increased with debits and decreased with credits. Liabilities and equity typically have credit balances. They are increased with credits and decreased with debits. So right over here, that's why I use T accounts. And the way we're going to do this, so our first step is to go through and to do the skeleton, right? I'm seeing what happened to cash. Second step, go through and make the T accounts, right? So we're going to make those T accounts. The third, also with that second step, we're going to make a big T account for cash. We're going to have operating. Then we're going to come down here and we'll have investing. And then we will come down here and have financing. Okay. Now, there's a lot of things that I don't like about this question, but I'm going to go ahead and kind of cut to it. In part one and part two, they basically say that the loss and then over here for the plan assets were both indirectly charged. They were charged directly to retained earnings. So when we look at this in terms of saying net income is reported on the income statement for the year was 57,000, the first thing I want to do is say that that number is wrong. My net income unadjusted, my net income unadjusted was 57,000. However, the amount of the loss, right? So if this over here, basically held to maturity debt securities were carried at a cost of 43 and they were sold for 34. So basically I had a loss on debt securities, and this is going to be for 9,000, right? This is going to be 43,000 minus 34,000. And then I have a loss basically over here on the plan assets. Okay, and this over here was going to be for 2,000. Where is that loss coming from? Well, if I had something that cost 50 and it was 80% depreciated, right? So I've got 50,000, 80% depreciated. That means my net book value for these assets was 10. If I sold it for 8, I have a loss of 2. So over here, my net income adjusted is going to be 57 minus the 9 minus the 2. So that's the first thing I did for this question. I frankly would never write a question this way, but the question is written this way. So we're just going to go ahead and address that. Now that I know my correct amount of my net income, where does that net income go? Well, it was reported at 57, but we just made those adjustments based on number 1 and 2. So I'm going to go ahead over here and I'm going to credit retained earnings. Remember, what does retained earnings look like, right? It's our linkage between the income statement and the balance sheet. I start off with my beginning. I add in my net income or subtract a loss minus my dividends. Okay, this is going to be my ending retained earnings. And my rule is whatever I go over here, I am debiting, I'm crediting retained earnings. So I'm going to do the opposite to cash. So this is net income. I'm going to come up over here. And so this over here is going to be my net income. My net income is going to be here at 46. So over here, I'm crediting retained earnings. I do the opposite to cash. Now let's go over here. So now that we've kind of figured that part, held to maturity debt securities carried at a cost of 43,000 were sold for $34,000 cash. So how would I go through and deal with this, right? So I've got over here, I'm getting cash of approximately right over here. This is 34,000. And just as a note, right, when I'm going through and doing my cash flows, right, the first thing I do the skeleton. I want to know what happened to cash. Second thing I do is I set up the T accounts. Next thing I do is I deal with the additional information first. So this is my, right over here, this is my available for sale or held to maturity. debt securities. And these cost me $43,000. So when I go through and look at this over here, what's the difference? Well, the difference is going to be that $9,000 loss on debt securities. Okay, so that's how we go through and do it. So when I do the additional information, I usually like to do this as journal entries. So now what we're going to go ahead and do is we're going to go ahead and post these into the various different T accounts. I'm going to go ahead and color code them like this. Okay, so held to maturity debt securities, 43,000 right over here. This is going to be, I'm going to credit long-term debt securities for 43,000. The cash that I receive from the sale of, so my sale of long-term debt securities, the cash that I receive over here from those is going to be 34,000. That is going to go into the investing section. Now, in terms of the loss, right, where does the loss go? This is going to go in the operating section. So loss on sale of long-term debt securities. And this over here is going to be at 9,000. Now, you might be asking yourself, like Bennett, like when I'm like looking at this stuff, like, dude, why am I adding this back into cash? Now, if you're just going through and learning it, I can just say, trust me, I'm like Indiana Jones, but I'm not that cool. The reason why we're going back and adding this back as a loss is that loss is not really taking a draw on cash, right? So because we're already showing this as amount of this investing part, so I'm basically going through and adding this back, because like the net amount of my total debits over here are equaling my total credits. And if I don't do this, I will not go through and balance my cash. But my rule is I add back losses and I subtract gains when we are going through and doing that indirect method. So that's our first one over here. Now, for the number 2, plant assets that cost 50 and we're depreciated, 80% depreciated, we're sold for 8,000. So let's go ahead and do that one. Now, this is by far one of the most important entries that you can memorize when you're dealing with asset sales. Loss, balancing, okay, cash, accumulated depreciation, equipment, gain, balancing, right? If I need a loss, if I have a debit to balance, just like on this, I'm going to be at a loss because I'm selling it for less than my carrying value. This is the same concept. When I have this over here, I've got equipment and I've got accumulated depreciation on that equipment. My equipment had a carrying value, or my equipment had a cost of $850. The accumulated depreciation was 80% of that amount, or 40,000. When I go through and I sell an asset, I've got to take that stuff off of the books. So over here, I'm going to credit equipment for 50. I'm going to debit accumulated depreciation for 40. I received $8,000 cash in part 2 right here. So to balance, I'm going to need a loss. Okay, so what do we go through? What do we do with all this fun stuff? I'm going to take this and directly post it to the T accounts. So first, I'm going to go here to plant assets. I'm crediting this for 50,000, right? I sold that asset, so I'm taking that off of my books. I'm also going to be debiting accumulated depreciation. I debit that amount for 40,000. Where did that number come from? It said it was 80% depreciated. So I take 80 times 50 and I get 40,000. So that's where that number is coming from. Okay, the cash that I receive, so over here, we're going to say sale of equipment. And this is going to be $8,000. I'm showing this as a debit right over here because that's the cash that I received as a result of selling the equipment. And then my loss is going to go directly into the operating section. So loss on sale of equipment. This is going to be for 2,000. So right over here, this is going to show up as a debit. Okay. Now, I've gone through, I've dealt with number 1. Number 2, let's take a look at number 3. The net income as reported on the income statement was 57,000. And as we said, we actually said that number was 46. Why? Because they made mistakes. So we just went ahead and basically dealt with that. Dividends paid amounted to 10,000. Okay, so where do dividends go? Oh, right over here on retained earnings. So I paid dividends of 10,000. Now, when it comes to dividends, right, I'm going to do the opposite to cash. Where does it go? It's going to go into financing, right? So over here, this is going to go to cash dividends paid of 10,000. Right over here, depreciation charge for the year was 20,000. Now, I would never be that nice. Okay. What you can do though, is if I look at accumulated depreciation, right, let's see why this is correct. What do I need to do to balance this account? Well, I've got 40 of credits, 40 of debits to balance. I'm going to need another 20,000. And if I apply the same methodology that we've been using, I'm going to do the opposite to cash, or I'm going to debit cash right over here. Now, if you call this an increase in accumulated depreciation, you're technically incorrect. This has to be described as depreciation expense. Remember, where does depreciation expense come about? I debit depreciation expense, I credit accumulated depreciation. This is how I go through and record it. So when we're showing it over here, like if I'm looking over here at Meta Platforms, formerly Facebook, they don't say increase in accumulated depreciation or accumulated amortization. They call it basically depreciation expense. Let's go back over here. So I've dealt with all of the additional information. Okay, so now let's go through and analyze the rest of the accounts. My current assets went from 60 to 85, or an increase of 25. I do the opposite to cash. So I'm going to credit cash over here, and I describe it by what happened in the T account. This is an increase in current assets or electrified assets. I go to my long-term debt investments. Does 53 minus 43 equal 10? The answer is yes, I'm good to go. Plan assets is 215 minus 50 equals 335. And wrong answer. We need to go through and balance this. So how are we going to go through and balance as well? We're going to say 215 plus X minus 50 equals 335. If I get over here, if I'm isolating X, this is going to be 165 plus X equals 335. X is going to be equal to, what is this? This is going to be 170. Let's check it out. If I put in 170,000 here, 215 plus 170 minus 50 gives me 335. This is why I love accounting math. Now, where do plant assets go? Right? Well, I'm going to plant those assets in the ground and they're going to go really, really big. No, they're not going to go in the ground. What are we going to do with them? What we're going to do is we're going to do the opposite to cash, and it's going to go into the investing section right over here. So we're going to put over here 170. This is going to be a purchase of plant assets. Okay, we've balanced the accumulated depreciation account, goes to depreciation expense. Current liabilities, to balance this, I need a credit of 18,000. I do the opposite to cash over here. This is an increase in current liabilities. Remember, liabilities have a credit balance. We increase them with credits, decrease them with credits. Over here, bonds payable. I went from 0 to 75. How do I do this? I'm going to go ahead and credit bonds payable. Now I'm going to do the opposite to cash. Okay. And let's do that right over here. And I'm going to put that into the financing section, right? If I buy or sell my own stock or bonds, that's going to go into financing. So this is an increase, or issuance of bonds payable. And over here, this is going to be 75. Now, is my common stock balance? Yes. Are my retained earnings balance? Well, 20 plus 46 is 66, almost satanic. Minus 10 is going to give me 56, so I'm good. Now, what I'm going to go ahead and do over here is I'm going to go ahead and take a look at my each of my sections. So operating 95, 25, subtract the smaller from the larger balance, leave the remainder on the larger side. So over here, this is going to be my net cash provided by operating activities. For investing, 34 plus 8 is 42. I subtract the smaller from the larger. This is going to be net cash used in investing activities. Come down over here to financing. Oh, I got 75 and I paid out that dividend of 10. So I've got net cash provided by financing activities. So I've got this all down over here. I'm now going to check my work. So when I have over here, net cash provided by operating activities was 70. Net cash used in investing activities was 128, and net cash provided by financing was 65. When I add up my debits, subtract my credits, I subtract the smaller from the larger, leave the remainder on the larger side, and thank the heavens, I am balanced. So once we have this done, we're now ready to go through the making of the cash flow stage. So I'm going to go over here and I'm going to go ahead and bring down each of these. So if it is a debit, it's going to show as a positive amount. If it is a credit, we're going to show it as a negative amount over here. And then right over here. Okay, it's a total of 70,000. And this is going to be net cash provided by operating activities. For the investing activities, sale, and again, I'm just copying this from the T account that I wrote. So over here, sale of long-term debt securities, sale of equipment, and then I had a purchase of equipment for 170. So this is going to be net cash used in investing activities of 128. And then over here, we've got over here cash dividends paid, issuance of bonds payable. So right over here, what I'm going to go ahead and do is let's bring these over. My cash dividends paid is going to show as a negative amount because it has a credit balance. My issuance of bonds payable is going to show as a positive amount. So my net cash provided by financing activities is going to be a total of 65. When I add up these three amounts here, 70 minus 128, but plus the 65, I get 7,000. So I'm done with this question. So again, the best thing to do with cash flows is I have a lot of other videos on my channel that you can find that have more simplified examples, but I would start small and work it up to big. Usually, most of the time, this is the real true test in terms of accountants. I've been on interviews where I've been asked this, pretty crazy. But in any event, I want to thank Wiley for allowing me to use their questions. Please don't forget to like and subscribe. If you ever need other solutions, please feel free to ask for them in the comments. I look forward to seeing you on the next video. Have a great day.